they'll never teach you this. Wall Street will never teach you this. Your stockbroker won't teach you this. And your financial planner won't teach you this. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Good news and bad news about money. And this is like a bonus event here. It's just me yakking to you. And it kind of explains why the Rich Dad Company was founded. Because as I've always asked, what did school teach you about money? The answer is what? Nothing. So you can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, or YouTube. And all of our programs are archived at richdadradio.com, because if you listen to this again, you'll pick up twice as much. But more importantly, you can discuss this with friends, family members, and especially business friends, fellow entrepreneurs and things like this. Because they'll never teach you this. Wall Street will never teach you this. Your stockbroker won't teach you this. And your financial planner won't teach you this. That's where the Rich Dad Company was founded. At Rich Dad, we're always studying something. Remember that we found out that quantitative easing doesn't mean they printed any money. But everybody, they printed money, so they expect stock prices to go higher and all that. So that's why I wrote my book, Capitalist Manifesto. And people say, why don't you invest in stocks? Because I don't have to. I'm an entrepreneur. I can create my own assets. I'm not saying you should do that. But with my Rich Dad, that's why I started, this E, S, B, and I. My poor dad was an employee or self-employed or a small business owner. And then there's big business owner and there's inside investor. So I'm a big entrepreneur. I have over 500 employees, multiple companies. But I invest from the inside. So if I ever show, I'll show it to you later. But the thing is, nobody knows, sir. So that bus driver, my age, his financial planners, his bonds are safe. And I'm quite sure the financial planner means that, because that's what they're taught to sell you. But what is going to happen? Who knows? Who knows? This is the biggest bubble in world history. So it's either going to be the best of times or the worst of times. And that's what we think. We're listening to Rich Dad. We have cash flow games and books and all this. We have real teachers, like my advisors, like Ken McElroy is really in real estate. We have Tom Realwright, who is a real tax guy. He's in Garrett Sutton's in the law and all that stuff. We're real. But none of us are giving advice. I want you to understand the relationship, this is macro, between stocks or equities and bonds. So this is cash, this is debt. You see, so if I have $1 million, I would put it in a bond and hopefully get 16%. That's safe as, if it's a U.S. Treasury, it's guaranteed. But to keep the stock market going up, they keep reducing them. But that's the price of not knowing. When I tried to explain it to him, he got really angry. He says, are you a financial planner? I said, heavens no, I do have some self-respect, But that's why we have John McGregor with Andy Tanner as part of our advisors, because those guys are for real. They're in paper assets. So can I make a prediction? No. Crypto is, Bitcoin is sucking the air out of gold and silver. And the Bitcoin guys are going nuts. They're happy as Larry. Okay. Two things are affecting the price of gold. One is interest rates went up and Bitcoin came in, Ethereum and all those other things. Which brings to my real rant. Here's the thing I'm really upset about is I'm talking to that poor bus driver, and then I was talking to one of these young, what they call hodlers, some young guy, who now he thinks he's Donald Trump of crypto or something. And so when Bitcoin dropped from, I think it was 65 down to 50 for a coin, I bought more. And this Donald Trump of crypto is probably 22 years old, says, yeah, you made a mistake. You should have bought this, you should have bought that, you should have bought this. He started telling me about all these Doge coins or Kardashians or Bitcoin's old. It's no. The kid's a gambler. Not that I'm not gambling in crypto. I am not gambling in gold and silver. I've started gold mines, I've started silver mines. But let me explain this. The reason I'm in Bitcoin is because it's the most established. It already has a network. It's got a head start on everybody. So this guy is now, won't touch Bitcoin because he's chasing the next hot thing. Now, he's too young to remember Pets.com and Amazon. Okay, to remember Amazon was a struggling little company. They had no profits. Pets.com had the sock puppet. Everybody was jumping up and down because the sock puppet was on Super Bowl and all this stuff. So all of these yo-yos chasing the sock puppet. And Amazon was the biggest thing going, but it wasn't turning a profit because they were reinvesting. They were doing, I don't especially care for Amazon, but they're doing the right thing. So they struggled. They kept reinvesting. I've met Jeff Bezos, because Rich Dad, Poor Dad made the list. He invited me to their openings. He's a good guy. I just don't like the politics, if you know what I mean. So Amazon was the better buy, but everybody bought Pets.com. And so gold goes down, and all you guys got their heads up their asses. That's the problem. They're not old like me, and they don't have all the scars on their back to see the stupidity. They don't even know what the sock puppet was. And that's what happens with no basic financial education. Whether you're old or young, if you're stupid, you're stupid. Just don't worry about it, and the market will take care of you. And the difference is that in my generation, it was real estate. So I took real estate courses. I've never lost money in real estate. I've made fortunes in it. Do you know? I'm an insider because I do all my. I don't touch REITs, R-E-I-T, real estate investment. I don't trust paper. I handle my own. I've started my own gold mine in China. Of course, the Chinese took it. It was a lesson. And I started my own silver mine in Argentina. So I understand mining. So all of these guys, my friends who are in crypto, now tell me they expect about 15,000 new ICOs. So this, basically all it takes is a brain and some electricity and a computer, and you can create your own crypto. So could Bitcoin be toast also? Possibly. In my world as a professional investor, I'm in the acquisition phase. I've taken a position. I've taken a position in Bitcoin and Ethereum. Every time it looks like it's getting a little cheaper, I'll buy it. I'll buy it. I'll buy it. So I saw Bitcoin at 20,000, I think it was, and it dropped to 7, and I waited. And when it came to 9, I bought. So today I'm still in the money. Could some hodler coin take off? Yeah. Could there be another Pets.com of crypto? Absolutely. But the difference is I'm in the acquisition. I've taken a position. I took a position in silver and gold. I have millions, not in this country. But I don't have any paper. I don't have any ETFs. I only take the real stuff. Because as I said, the Perth Mint can't deliver on silver. If a mint can't deliver on silver, who do you trust? And so with all of these young kids coming up going to invent the next Bitcoin, I don't doubt they will. I don't doubt one of those 10,000 new crypto may blow Bitcoin and Ethereum out of the water. And if that happens, I'll make my switch. But until then, I'm like I was with gold and silver. I'm in acquisition. I've taken a position. When I sell, it's called distribution. So as a professional, not a speculator, and I don't flip houses because I think that's really stupid because it's such high risk to flip a house. But today, everybody's flipping houses because the price of real estate is going through the roof. I was talking to the guy who cuts my hair. He says, I finally bought a house. I offered 100,000 over the price. I'm going, holy moly. So not only are stocks going up, real estate's going up. When this happens, the idiots jump in. And that's what's happening right now. So Bitcoin is the same way. So when it took a dip, I bought more. Can it go lower? Yes, I'll buy more. But there's one big difference between Bitcoin and Ethereum and real estate. Bitcoin and Ethereum are liquid. Means I can get out. If I realize that there's a new NFC, whatever they call them, or a new guy's going to take out Bitcoin, I can get out. But with real estate, the trouble with real estate, if it goes down, you're the skipper of the Titanic. You're going to ride that baby all the way down. So real estate is not liquid. At least stocks are liquid. But that poor bus driver dropped from liquid stocks into liquid bonds. He's got no place to go. So when I talk to him about possibly gold, silver, or crypto, no. He's an old guy, he's an old guy. So they're all related. So in this world of money, they're all related. You know, it's like we're all related somehow on this whole planet. And so that's the world of money today. So that's real financial education. If you realize you cannot make a prediction, especially today, because nobody knows what's going to happen until it happens. The question is, are you prepared for when it happens? So I love Bitcoin because if I realize there's a hot new coin coming along, I can get out. But in real estate, I'm stuck in it. So those are some of the differences between investors, acquisition, taking a position, and distribution. I can distribute my Bitcoin and gold and silver quickly. I cannot distribute my real estate that quickly or my businesses. So those are some of the differences in that real financial education. So I thank you all for listening to this, my rant on this.